afterward. I was about
It's a Bitcoin podcast. The only one that's making your money is you. Listen to the Bitcoin podcast. So hold on and listen to the Bitcoin podcast.
Hey, everybody, welcome back to Big One Podcast. I'm the host talks first. My name is D.
I'm host number 2, Dr. Corey Petty.
And I'm host number 3, Jesse. Bro,
And host number
I'm host number 4.
Who's this guy?
Joe.
Who's this other guy?
host number 4, Joe. Joe, welcome to the
Blau.
show. You're guest hosting because you were spitting the other day in our Discord. Which, by the way, if you'd like a Discord to join, it'd be this one up here.
Hope that works.
But he was
it works.
he was spitting in the Discord, and Joe and I. So Joe is amazing because not only is he a founder, a developer, I don't know, so many things. I feel like you've worn so many hats, including the one you're currently wearing. But right now, founder, you're probably an investor of sorts. You're probably a trader of sorts. I've said that 4 times now. Would you like an opportunity to describe yourself, or should I just keep trying to go freestyle with it?
Please stop.
I mean, you hit it. I pretty much just say founder and investor. That's pretty much it. So
Okay. Would you call yourself CEO or president? This is important.
I just
different.
call myself founder, but I think legally you have to have a CEO for a company. So you have
You
to
do,
call
yeah.
yourself a CEO.
You have to call yourself that? Or can you just be like,
Mhm.
let's
Yeah.
slide that by the wayside?
Nah,
Like,
yeah,
on paper you are. But
yeah,
like,
basically in the company, I am the CEO, but I wouldn't tell anybody that. I would just say I'm a founder.
You have to dress different when you start saying you're the CEO. These are just facts.
Exactly.
it's not
I'm
in a
not
tech
ready for that.
community. You just gotta wear a different hoodie.
This is good. This is nice. This is Viore. This is what's in right now.
What is Viore? Let me look that up.
Jesse's
Well-
about to start wearing some nice hoodies.
Yeah.
No.
He went from CEO from regular to CEO hoodie. So we invited Joe on the show to talk because Joe and I often get on these, like, I wouldn't say long rants. I would say small, very articulate conversations about the trajectory of crypto. And it pays good money to one's pockets to be early on a new hype train. It pays to be early on a new trend. Right? And if you look at crypto's market over, I don't know, the span of its 20, what is it? It's not 20 years,
What? No.
16 years.
Yeah. We'll call it that.
You can round up 16 to 20. No, 16 years. We'll call it 16. You see like let's just call it a root function forming in there. I think it's kind of a ceiling is coming. But, I want to be proven wrong. And Joe, you're good at proving me wrong. So elaborate, man, on what you were saying. Was that yesterday or the day before yesterday?
It was
Just
probably it was probably yesterday. Yeah, I guess. Well, I think the origin of this story actually goes back to 2023 ETH Denver, which is kind of like where I feel like that was the ETH Denver that was kind of the most ridiculous one.
That's the one I was at with you?
Yeah.
Yeah.
Yep. That was like the most ridiculous one that I went to.
It was out of hand.
They were at the
Yeah.
table next to us, right? When we were at the bar, and then you found like that's where they were talking about Sido, or are you talking about the other one?
That was the
Which
next
one?
year. This is the year before that.
Hmm.
The year before that, I went with my co-founder of the company that I started before at the time, the Atomize company. And I don't think I met up with most of you guys, but I think I did see Corey there. And it was very, like, it was still around the time when like NFTs were still in, and there was still a lot of like hype, and there was a lot of random stuff. Like the thing that kind of really was the the moment that was like the biggest shock to both me and my co-founder was we went to this art gallery thing, and there was this trans person talking about how they invented Pussy DAO, and that was the first DAO in Bitcoin and before Bitcoin and whatever. And my co-founder and I were like, what is going on here? And it was just like a lot of stuff almost on that level. And I think that was the first time I started to really question. I was like, okay, what's going on in crypto? Right?
What is this world doing?
Yeah, I was like, what's going on here? Like, are we like where is like the trajectory of this going? What are we starting? What are all these companies? Are these like ideas actually founded in something that makes sense? Or is it just somebody has this like, shower thought, and then they're able to get some money and get a little meeting and get an event hosted and then come together and, share their shower thoughts with everybody else in like a roundtable discussion. And so that's kind of what led me to go back to like first principles. That's where I ended up finding remember I shared with you, D, the poker code that's in the Bitcoin code base in the first commit. That's where I found that. It was just very soon after that. I was like, what's going on? Like, what are we doing? And so almost like, what's it, David Hoffman? What are we even doing here, man? So that's what kind of sent me back to the beginning and made me really question like, okay, what is crypto about? What is the use case? What is the value proposition? And then it took me a few years to, kind of figure out what that was. But I think the discussion that we had yesterday is the result of, I guess now like 3 years of kind of like refining, thinking about the idea, refining, thinking about the idea, and then refining down to a very simple thing that I can understand and wrap my head around, and that I can actually walk back in the past and come up with a very simple statement that I think I can like back up with numbers and facts.
So what's the simple statement?
That crypto is only about trading.
Elaborate.
So I wrote a blog post about this because I was thinking about it. And if you look at, we're in the 5th cycle of crypto, right? The 5th halvening or whatever. If you go back to the first, like, I would say like product market fit moment of crypto, it was the Silk Road. It was Bitcoin being used to trade for drugs, let's just say, right? It's not only that, right? There was a bunch of stuff.
And WoW subscriptions.
Allegedly, and WoW subscriptions and all types of stuff, right? But it was effectively trading, right? You're trading this one asset for another asset. And so that's the first cycle of Bitcoin until the first halving. And I think the top of the Silk Road, like when the Silk Road basically collapsed, is the highest price point of Bitcoin in that first cycle. If we then move forward to the second cycle after the first halving, the number one thing, the highest trading point of Bitcoin was Mt. Gox. That is the highest price point in the second cycle of trading of crypto. And Mt. Gox was basically an exchange, the first exchange. You traded JPY and Bitcoin on there. And that was kind of like the height of the second cycle. If we fast forward to the third cycle, the highest point on that chart is basically, this is the 2017 cycle. This is kind of when we all finally got to know each other. And I would say like, I was listening to you guys way before the top of the 2017 cycle, but this is when I kind of like joined the community. But the top of that 2017 cycle, the top was at December 19th or December 20th, 2017. That was trading on the ICO hype and speculation. Now, obviously, there were tons of other things that were under there, like NFTs were coming out. There was like a bunch of DAO stuff happening. There was a ton of stuff that was undercurrent of that. But effectively, that was the ICO cycle, right? ETH went from $8 to, ETH went from $8 to 1,500. Bitcoin went to 20K. Like it was that hype cycle, right? And the ICO was the top trading. We fast forward to 2020, the 2020 cycle, that was the NFT cycle. The retail were really onboarded because you could tell somebody who didn't want to trade, these speculative ideas like ICOs, but they felt sophisticated when they were like, oh, I'm trading art. I'm buying art online. I'm buying these, these like, what are they called? Like digital art pieces, or I'm buying these apes, or I'm buying these things. And they had this idea that you're actually correlated to real art, right? So you're buying this art, and that on-ramped a ton of people. And the top of the last cycle, which was like 2022, right before the year, basically before that conference, was like the art hype. That was, art blocks and Bored Apes and everything. Like they were doing the whole metaverse thing. Like that was the height of that last cycle. And now we're in cycle 5, right? The initial thesis for cycle 5 was meme coins, which is trading. Although I think meme coins are very similar to ICOs. They're basically like fast ICOs, right? They just go up and crash.
They're
a lot
non-utility.
faster.
They're like purposefully non-utility ICOs.
Yeah, exactly. So like ICOs, at least people back then, they were trying to do like stuff with them, right? People were they had these ideas, and maybe they weren't like the most in-depth ideas, but people were actually trying to build stuff that had utility. It was just that we hadn't really figured out a lot of pieces yet. Like DeFi wasn't even really a thing back then. We were still trying to figure out some of the core concepts of crypto. But memes are basically intentionally not valuable. And then the thing that's starting to kind of take over this cycle right now are perpetuals, right? Which is also trading. Exactly, yeah, perpetual swaps. So that is the new theme, the new zeitgeist that's kind of capturing everybody's attention in this cycle, which is like, let's trade. We don't need to trade the underlying asset. We just need to directionally trade. It's almost like vibe trading, right? We need to trade these large scale consensus themes. We don't want to trade low cap, as my friend likes to call them, low cap shitters, right? We want to trade like Anthropic, SpaceX, these like big projects that have lots of money behind them, lots of ideas behind them, right?
Should call them big cap shitters.
Big cap shitters.
Big shits, not little shits. Sorry. No.
Exactly. So that's kind of like, and if you just go back, that's like the theme of every single cycle. It's just trading. And yeah, there's other ideas that are in there, but and I still think the core principles of what were outlined in the white paper, the Satoshi white paper, are still underneath, right? You want self-custody, right? Which is in all of these. You want censorship resistance, which is underlying all of these. You want peer-to-peer connectivity, peer-to-peer transfers, which is underlying all of these. But fundamentally, the use case for crypto is trading. And you need a lot of extra stuff around it to kind of like bolster it up. But that's just what I've kind of like come to after 3 years of really trying to figure out and dilute down the PMF idea of what crypto is about, and like extrapolate it so I can explain it to myself in a way where I feel comfortable and I'm not going to get sucked down a rabbit hole like I did in 2021 and 2022. And maybe get confused and think that like a protocol that like generates its own yield is really the thing that blew up 2021, when the reason is that people came to buy NFTs, and through that reflexivity, that made everything else go up. It made DPIN look important. It made, yams and like food coins look important. It made all these other things look important in a period of time when the thing was that people were just buying NFTs, and then money ended up spreading all over the place for the NFTs, from the NFTs.
I would push back. I would say if you're being reductionist, you could simplify it to that. But what I see is people looking for more than just transactional utility, but nobody could get there. Like, look at DPIN, right? People tried to create like DCDN networks or decentralized storage protocols or decentralized, like, I don't know, like VPNs using crypto. A lot of different things because people got bored. Even look at the 2017, which CryptoKitties was started late 2016, right? Because was it ERC 721 formed, I think, December 2016. But people are looking for more utility. And Mt. Gox, trading cards, CryptoKitties, trading cards, Pokemon, trading card. You wouldn't say Pokemon is just for trading. It was meant to be played, but adults scalp the fuck out of it. And then now it's looked at as like a speculative vehicle of investment. I think if you, again, I think you're looking at the picture in an overly reductionist way, only because nobody ever built a new substrate for which people could build like new use cases on top of. So if nothing new is created, if no new substrate is created, you're probably right. The best that you can do with a blockchain is probably transaction stuff. I wish it wasn't, but yeah.
I mean, so if you think about what technology what it does, right? Like what it allowed for that previously wasn't allowed for was digital scarcity. It allowed you to create digital scarcity in a manner that didn't trust other people. So I could send you some digital scarcity and not have to worry about someone else taking that from me. Bitcoin was that, right? And then we just made it more generalized. Ethereum generalized the living hell of it. Solana optimized the efficiency of being able to do it, but it's still the same thing. You're still creating digital scarcity, some asset that's digital. And then somebody, like, in order, like, just by the nature of being an asset, somebody has to own it. And because it's scarce, it has some potential value if given there's a community of people that want that scarcity, that asset. And so people just started like playing with that idea. And so, of course, trading is at the center of everything, because the idea of moving an asset around digitally is trading. But like looking at it from Joe's perspective, like, how are you going to look at the price movement throughout this entire time? Like, what's driving? Like we're using this as a proxy for adoption, basically, right? The price of Bitcoin is a proxy for the price of adoption. And what Jesse is saying is that adoption is a much broader thing. Like, we don't really have a better. There are a bunch of proxies you could use. Everyone uses price because that's why most people actually get into it, is to try and make some money, or like it's a speculative asset. But like from a technology standpoint, that's all you're doing. You're moving digital scarcity around, which is trading. And so, I mean, I get that, and I think it's interesting to look at. Like, when you look at the tops, that's what, from a consumer perspective, that's what it looks like. But from the bottom, you look at it from the bottom on the builders. There's so much experimentation on what could be built, but that has yet to be given a shit about for the most part. What people give a shit about right now is like, can I buy something that's meaningful to me in some community, and or can I buy something that is potentially valuable to me later? And the breadth of us being able to ask that question, what can I buy that's either useful to me or that is valuable to me later, is just gotten bigger and bigger and bigger and bigger and bigger and bigger as the community expanded from, like, just straight Bitcoin, getting drugs on Silk Road, to perps, or what the fuck's going on today.
Yeah, I mean, I think.
Like,
oh, go ahead.
I feel like it's to. I agree with you to a point, Joe. And then there's a part of it also that's like, those feel like lagging indicators. Those feel like a hindsight is 2020. But when I look at this graph, right, see, it's got these nice flags here of the top, and then it collapsed. But there's all this range of time in between these tops where there's like exploration of thought, exploration of. And I guess that's what you meant when you're saying, like, oh, I'm not going to get caught in that sauce anymore. I'm just going to just know what is trading and what is causing all of this trading.
We're trying to build a business.
So, yeah, if you're trying to build a business, you need to dip that cup into the money flows. Hold
on. I want to bring up an example that we throw around in the Discord server, which was like Counter-Strike, right? I threw that in the mix, and you took a look at it and you're like, wow, shit goes up, but it's crashing now. You wouldn't say the whole FPS genre of video games was meant to be a vehicle for trading. You wouldn't say Halo is trading. You would say Halo was a fun game that we all played on Xbox and got together with friends in a living room or had LAN parties. It's just that certain first-person shooters happen to introduce microtransaction dynamics or scarcity of in-game weapons, and sometimes that takes over the core or the purity of what the substrate was originally intended to be. People make jokes now that Counter-Strike is only alive because there's value in the skins. Nobody really cares about the game. And now there's a bunch of hackers in the game. I would argue that they might actually be correct. But what came first, the trading of the skins or the actual Counter-Strike game in the 90s? It was the game, right? So I wouldn't say Counter-Strike is trading. I would say it was originally an FPS game that was fun for everybody, just like all the other games in the FPS genre. But when you add money to something, and then the supply and demand scarcity dynamics take off beyond the intended purpose, again, just like Pokemon, now you have people not really playing the game to play the game, but playing the game to make money. And that's kind of how I see crypto, or like blockchain, like a general purpose L1. It has been turned into that because nobody could figure out or wanted to lean into figuring out how to build new substrates from that original substrate. So like, if you, for instance, if you built real private decentralized storage, you unlock a whole bunch of different businesses, almost like a tree branching out, right? But you can't get to that point if nobody builds that and nobody adopts that. So it's kind of like, it's not a chicken and egg, but you're absolutely right, because nobody has built that, and that it's been built successfully in terms of
The egg came first.
is ass, Arweave is ass. Anyway, you get where I'm going, right? That's my pushback against your thesis, Joe.
Yeah.
Let the record show the egg came first. It's not an argument, but go on, Joe.
All right. So yeah, I would say, like, everything you're saying, I think is, directionally correct when you talk about the gaming industry, right? Actually, the guy who invented Counter-Strike, he went to Virginia Tech. He was actually there when I was there. And while he was like supposed to be working, he was basically making Counter-Strike.
That's such a Joe thing to say.
Yeah, he lived in like the largest male dorm on the East Coast. Yeah, so like with gaming, right? Gaming is still, a lot of gaming is still about just playing a game and having fun, right? Like I play Zelda and there's money in there, but it's just not fungible. It's not exchangeable for anything, right? But when I think about crypto, when we go back to like 2012, 15 years ago, 14 years ago, it was about trading back then. It's not like we're talking about something that just popped up in the last cycle or like the last couple of years. It's been a continual pattern that we've seen.
It depends.
It depends. Years.
It depends on how you came into it. So I think I speak for both you and I. We came into it to make money in 2016, 2017, because we both met in the Slack community.
My first entrance was in 2013, and I just got onto it I was just literally just mining just because I wanted. Somebody wrote a blog post on TechCrunch called "How to Mine Bitcoins," and so I just went to the thing and I followed the instructions and I started a miner, and I was mining Bitcoin on, what was that site? Slush Pool.
Slush Pool.
Yeah, I was a Slush Pool miner, and I ran the thing for a month, and I got my electric bill, and it was astronomical, and I was like, this is retarded, and I just turned it off, and then that was it. I was like, all right, we're good. And the Bitcoin's still sitting there.
Huh? Let me give you a different perspective.
Yeah.
In 2013, I was a grad student doing my master's program. I was trading Counter-Strike skins back then for money. What I saw in the wild in that context were little kids who couldn't get a bank account, who couldn't get a PayPal account. They were using Bitcoin as a way to be the in-between of buying and selling skins, right? Same dynamic for World of Warcraft stuff. So it does bank the unbanked. It's just, if you're in the US, you don't have that problem, generally speaking, if you're an adult. So it looks like it depends on the perspective that you're approaching the technology. And people who are in countries where they're subject to crazy inflation, Iran, Turkey, they look at it like a way to escape instability. So like, I guess the way that you're approaching it is uniquely your own experience. And I think you're not taking into account the broad spectrum of how people got into the space in general.
Yeah, but if you're looking at it from a purely all right, what do we call adoption? Right? If you're looking at it from a price point perspective, like the size of the market, I think what's moving the market mostly is what Joe's saying, which is, and for a lot of people, the only thing that matters. For people like me and you, a lot of other things matter much, much, much more.
Yeah.
And the way in which these networks are built so that they're sustained and they enable use cases like you're talking about and these alternative ways to trade that like traditional finance can't do is the more important things for us. But what moves the market is not those things. Like those are like necessary but not sufficient to move the market. You need those people that only give a shit about trading stuff.
I think I get it.
And only up until, and then we talked about this when I was working at the IFT. Privacy technology, the hurdle of adoption will never be crossed unless the world goes into the shitter. Then people will look for solutions, right? That's really, you only look for, like when I was a young kid, I only looked for a way to pirate things because I didn't have the money to afford the books. I feel
he didn't pirate anything. Whoa. Allegedly.
It's statute of limitations. Should be fine.
All right, man.
But you see what I'm saying? Like, if people need crypto to be more than just trading, and those tools exist because maybe a handful of people that are in the minority are building those tools, it has value in a different direction. But you're probably right. Financially speaking, in terms of moving the markets, yeah, it's big people with a lot of money.
I mean, to like touch on a couple of points, like for me, when I grew up, you guys all know this, but I lived in a bunch of different countries growing up. And I lived in Brazil between 1989 and 1992. And in those 3 years, they had 3 different currencies. Like the money inflated so fast that they basically inflated their money out of existence, and then they had to make a brand new currency and start all over.
Yeah, my paycheck went down so fast in the 2 years I lived there.
Yeah, like you'd basically get your money and spend it immediately, right? Like my dad would give me money, I would go to the store, I'd go buy something, and he would just be like, just spend it all to zero because it's not going to be worth anything in like 2 weeks. So I've been in environments where there's hyperinflation. Now, I wasn't making my own money. I was, in 3rd grade or 4th grade or whatever, but I've been in that hyperinflationary world. And I know that that's obviously an issue, but and then another point is like in like security and cryptography, right? I spent 7 years working at DISA, which is like the Defense Information Security Agency. They do all the cryptography for all the branches of government, right? And I recognize, from being in that space for so long, that privacy, cryptography, security is extremely important. But one of the reasons why I left is because I realized that, and you even brought this point up, is like people are going to look for that when it's the thing that they care about. And one of the key things that is like a saying from Y Combinator is make things people want. It's a very simple sentence, right? And if you just ask yourself that, and then you ask yourself, do people really want that right now, right? Is that like the top number one thing on their list? A lot of times privacy and security are not it. They want convenience. They want all this other stuff.
You're absolutely right.
They'll trade that
why
off.
it was so hard for adoption.
Yeah. And so I think when I'm trying to just be as, as reductionist as possible, I guess is like kind of the word, right? It's like, okay, what do people want? If I look at crypto as a product, I'm like, what do people want when it comes to crypto? That is what I've like reduced it to, right? And like I think to your point, right? And even if you look, right, we see all these other people trying all these other things. I think one of the other points in my blog post that I wrote was that, success covers all sins, right? So when people are buying,
I 100% agree with that. Yeah, I was just about to say that.
When people are buying and the price is going up in 2020 for people buying NFTs, you get all this other stuff that people get to try. You get this pussy doll trans person that gets to talk about that stuff. You get all these other things that just come up. But the thing is, if you get caught up in some of those other ideas, some of them could be legitimate ideas, right? Like, let's say you want decentralized storage and there's an actual use case for it. That could be a legitimate idea and a legitimate use case that gets to flourish in the wake of trading being the thing that's brought everything up, right? Let's say you want on-chain yield.
You're right.
That can be a thing that gets to flourish in the wake of trading being the PMF product that people want. And so I'm not against anything else. I'm just saying that there is a clear thing that is defining PMF in crypto, and then there's a bunch of other stuff. And I'm cool with everybody trying all the other stuff. I'm just trying to let people know that the other stuff is there, but trading is what's letting that other stuff flourish.
Yeah, we talked about this before.
So
When you're
I can
building
break it
the
down to-
application layer, you just need like 2 or 3 of the 7 deadly sins, and you combine that and then form an application idea, and then boom, you're probably in the right direction.
I can break it down in another way too. It's just I feel like trading is the core revenue, right? And not until the years are really good that you can actually afford to do research and development. And for crypto, trading is fueling all that R&D. And I think that's just what it is, right? I don't think there's any way to paint it any differently. And right now, the trading ain't so hot. There's like other things to trade, like you said, Joe. Like I'm opening up my Coinbase app and they're asking me to trade toilet paper. I'm like, what is going on, Coinbase? Coinbase, what happened to you? I used to just be able to trade. Now I'm trading prediction markets. Like, are they gonna run out of toilet paper in the fall? And I'm like, why is this a thing? Right. And so if the trading isn't popular, then crypto doesn't get a chance for the R&D for the other to build the other, as you said, substrates. And until then, we're stuck with just regular old plywood. So,
At what cost? Like,
what do you mean?
I mean, somebody said like the general phrase, and what everyone seems to love going after is make things people want, right?
That's easy to answer, though.
Wait, no, I know, but like, what happens when that's what you optimize for generations, and you make sure you're building things people want? That's an extractive way. People don't even know what they want. You're just telling them what they want and giving it to them in a way that makes them fucking feed off it like an addiction. Like if we just look at the way the internet was built, not a lot of us are happy with the dopamine like hit addiction of social networks. And what were those? That was building something people wanted. And look at what the cost was. A bunch of ADHD fucking retards that can't pay attention to anything for more than 3 seconds.
Alleged retards.
So like there's a cost if you take this too far, and that's the only thing you actually care about. And you're right. You will be successful. And if your mantra is success covers all sins, then I guess you've washed your hands. You don't really give a fuck. But like I think there's a big cost to this if that's the only thing you care about. Because you're right. It will be successful. People will do the things, especially if you take advantage of them. And more often than not, in the pursuit of success, you will take advantage of people.
I think just generally, even if nobody ever okay, I always think the pendulum always swings back, right? So if society optimized for extreme capitalism and let's say trading was the end all be all for blockchain, it's going to swing back, and it's going to swing back with a vengeance when you optimize society for a certain thing. And then you're going to have social upheaval, riots, because you're going to have a lot of rich people, or not a lot of rich people, a lot of poor people. And then the poor people are going to take up weapons and kill rich people, right? It's what's happened throughout history. Look at French history, right? People are getting robbed.
Yeah, that's
they
pretty
have
much
crypto.
what happens.
So, yeah, I mean, that's what happens when you optimize the system, and that could be what will happen in the future, in the near future. AI is this big old thing. It's really big, monetarily speaking. It crashes. A lot of people are jobless. Who knows? Look at the Great Depression. That might be in the cards.
Debbie Downer's
it's always
I got a way to bring it back. When AI
it's always in the
crashes,
cards, but
we'll be shorting it and we'll be making money.
I would argue that like capitalism we're way beyond capitalism. They're literally changing the rules for the Anthropic and the OpenAI and the what is it, SpaceX. They're changing the rules for these guys to actually get like, come on now, this isn't capitalism anymore. We're playing someone else's chess game. It's not capitalism. We're beyond capitalism. I don't even know what this is anymore. Maybe we need an actual.
It's like the private companies are transnational and they're larger than governments.
Yeah, so they get to just write their own rules, I guess. Yeah. So, anyways, but I do think that I don't know if Perps is like the top here. I don't know if Perps is like.
Can you explain Perps to me? Explain Perps to me. I've been so in the weeds at a commission when it comes to what people are actually doing with the chains.
Yeah.
Like, what the hell are Perps?
So I can give it a good shot. So you've got periwinkle, lavender, violet.
this motherfucker.
See, that's
that
why I
chat.
joined the podcast in the first
Well
place.
played.
Though.
Oh
Well played.
gosh.
Clip,
Well played.
clip that shot. Clip that. Clip.
Oh my gosh.
I don't know. That's why I gave you that response, Corey. I'm waiting on Joe to
Welcome to the Bitcoin
explain
Podcast. We know what's going on.
All right. So perpetual swaps is a concept invented by Arthur Hayes, our favorite man.
Yeah.
And
That guy did it.
they invented, I think, in 2016. And so what a perpetual swap is like when you trade an asset, right? Let's say you want to buy 5 shares of Tesla. You basically go and buy the 5 shares, then the 5 shares are assigned to you, and you can basically hold them for infinity, right? You can just hold on to them. There's a more complicated asset than that, and that's just like a market buy. You just buy the thing, you hold it, right? Which is pretty much what I would say a lot of trading is for most retail people. There's a little bit of a slightly more complicated asset called an option. And you can do an option where you basically it's like a pre-order. You put down a price now and you say, I want the option to buy this thing at a time in the future. And then at that time in the future, you can either exercise that option and pay and get it for the price that you said in the past, or you can basically be like, no, I don't want it anymore. Right?
You forfeit the amount you started with.
Exactly. Yeah. And the option has a deadline price, right? And so this is what a lot of the Chicago Mercantile Exchange is traded on, because like farmers and people that are doing like wheat and sorghum and all this stuff from like video games, they're trying to hedge their risk for different types of like droughts and stuff like that. So they'll buy, it's basically like pre-ordering your crops in the future.
Concentrated orange juice futures.
Exactly. Mortimer.
Thank you for that.
So yeah, that's what options are. Now, perpetuals are an option without an expiration date. So it's a perpetual into the future contract that you can just redeem whenever. Now, what ends up happening is when you take an option, you're borrowing money. When you take a perpetual, you're borrowing money. And so what happens is that in order to keep the perpetual swap going, you end up having to pay this thing called a funding rate. So it's basically like a loan that you take out and you just keep paying this loan. And as long as you're paying the loan and your order, like the trade that you're doing is within the bounds of the rules of the contract, you can just keep holding this thing forever. And so that's what a perpetual is. It's like an option without an expiry date.
And how do you generalize that to crypto? Because like if you think about that from a traditional finance point of view, it makes quite a bit of sense. But like when you generalize that to all of the random ass assets in crypto, what happens?
So what's happening is there's this chart, and I think I've shared it in the Discord a few times, but it's this chart. It's called like all of the world's money. I think if you just Google search,
Oh yeah.
yeah,
it's absurd.
So if you look at that chart, you'll see like all these
derivatives.
breakdowns. You'll see like, crypto is like 1.5 trillion and gold is like 20 trillion now or whatever. And like everything has these like little groups, right? The thing is that perpetuals are purely synthetic. There's no like real underlying asset, right? You're basically just trading direction, right?
You're betting.
So,
You're betting on something to happen.
Yeah, sometimes usually
Derivative.
they're correlated to an asset, right? So if
It's
you
a
trade,
derivative of an asset. It's
Exactly,
It's
yeah, they're
betting,
all
it's betting on an
derivatives.
asset. Yeah.
Exactly, it's purely derivatives. And so if you look at that chart of all of the world's money, there's like a half a quadrillion to is that right? Yeah, half a quadrillion to
It
a
was like 42
quadrillion
quadrillion, like a few, like
in
5
like
or 10
these
years ago. Yeah.
Yeah. Well, it's probably
Indirect.
gone down just because of the market. So let's just say there's like 500 trillion
A lot.
dollars in perpetuals or like these derivatives, right? That are not correlated to anything. And so it's like the largest market on planet Earth is all these derivatives. So what this is it's basically like you're just trading the vibe, right? Do I think AI is going to go up? I don't need to buy OpenAI and buy, Micron and buy all of these actual underlying assets. You can just trade almost like the vibe of what's happening, right? And in trading the vibe, you don't need to like go through all of the process because you just care like, hey, I think AI is going to be bigger next month than it is this month. You open up a position that's like, I want to buy Nvidia, I want to buy Micron, I want to buy Lumentum,
Interesting.
I want to buy whatever, and then you can just trade these things, and if they go up, you make money, and if you're wrong, then you lose money, right? So it's really just
go ahead.
Go ahead.
Keep going. No, I had an epiphany while you were talking. Keep going.
Let's drop the epiphany.
I mean, that's why all the billionaires are buying media companies. So they can predict the vibe.
They can manufacture the vibe.
They can manufacture and try and predict.
That's even better if you make, yeah.
That's why they're all buying media companies.
Yeah.
Like, it makes zero sense for Elon Musk, a tech guy, to buy Twitter. It makes zero sense. But now it makes a lot of sense.
It's a tremendous
And it
amount of
also makes a
control
lot
and propaganda.
more
in it.
sense that he wall gated the API. He wall gated. What's the word? It's late here where I am. What's the word? Gate kept.
Gate kept. Yeah.
Yeah, why he put a big old golden gate on the Twitter API, so only the wealthy could really could afford to get access to that.
Well,
That makes a lot of sense now because I've been
for training. No, well, hold on. I just want to get to something that I wrote in chat elsewhere. But the thing that there's so many different risks when you're trading perps. One of the huge risks is transparency of the ADL system, right? And if you look at whales trading, they bitch and moan about this because what they see in the front end, they should not have been liquidated. They kept collateralizing the position.
Yeah.
Right. So like the white whale took a huge beef on this out on Binance, right? I don't know if did you see that, Joe?
Yeah. And I think it's probably good to explain what ADL means for people that might not understand. If you want, you can do it. I can do it.
Go for it. Yeah.
Okay. So
I like your explanations.
ADL is an acronym for auto deleveraging. So what happens is when you open up these perpetuals, right, you are borrowing money from somebody else to basically, so let's say I have $1,000 and I want to trade $1,000 on Bitcoin, but I want to make it seem like I have $10,000. I would do a 10x perpetual long with my $1,000. So I have to go borrow $9,000 from somebody to basically do this trade. So let's say I pay $50, somebody gives me $9,000, and now I have $10,000 exposure to Bitcoin. Well, what ends up happening is if the price of Bitcoin starts going against my position, right, and I get to this liquidation point, there needs to be some mechanism that unwinds all the trades, pays the original person the $9,000 back, and kind of reverses everything, right? Mm-hmm. Now, when this thing starts happening very rapidly, when everybody's really over leveraged, then everything's ratcheted up to exactly.
Which is what Arthur Hayes decided MEXC to do back in the day. Remember? He had up to 40x leverage. It was something ridiculous. Yeah. I
mean, you can do 50x leverage on Hyperliquid for Bitcoin and S&P.
I'm sure you can lose your money really fast.
And it's gone.
Exactly. Yeah. So the ADL is basically the program that is responsible, or the auto deleverager is a program that's responsible for cleaning up all the leverage, making sure everybody gets their money back, and making sure that the system is solvent, right? Because if everything unwinds too quickly, then you basically have to socialize the losses because people have borrowed money and they haven't paid it all back effectively. So the ADL is the term for how do you ensure solvency in this perpetual system.
There's also another problem is I don't know the dynamics of so MEV used to be super opaque, and it probably still is to some degree in terms of order book flow came from more often than not private deals with large application layer projects who had a lot of trading volume. So that MEV providers could essentially front run those transactions. No different than kind of Robinhood Citadel dynamic, a few years ago. Another problem that you have is that you have flash loans in the mix, right? So again, this is why I don't think most people most people think they're trading when they buy and take spot positions, and I'm just like, yeah, okay, bro, like you're trading. But like real trading is really, really complicated, and the risks are, you really need to be an infrastructure to provider to really control for a lot of the risks, and even then it's still extremely risky. But yeah, unless you're a market maker, huge market maker.
Yeah, I mean, I totally agree. I think like the level of risk is extremely high, right? I wouldn't necessarily say that it's outside of the level of risk of like, hey, buy this token called Litecoin and let's watch Litecoin go up to $420.
I mean, it's like that's not. I mean, that's more like akin to say sell your family fortune and buy Litecoin. Like,
I mean, that's the thing is you don't have to spend. I mean, you can trade in a way where you're not spending tens of thousands of dollars. It's just a faster game, right? It's a faster trading exercise. That's all it is. So if you're wrong, you're going to be wrong and be proven wrong quicker than if you're doing a longer hold, right? Where you just market buy and you're just like, I can wait. Like if Amazon never goes to zero and I bought Amazon shares 10 years ago, then I can just keep holding on to it forever.
yeah, it depends on like your time resolution of money. Because like if you're in crypto and you want to buy something and you don't have to use it anytime soon, you can pick on something that's going to over time grow. But like there's going to be as we've seen in some of the mechanisms that Jesse pointed out, there's a lot of volatility and fuckery that goes on in the short time resolution of people moving it around for their own personal benefit for small trades and sandwiching and MEV and all the things that happen, right? But like as we've seen over time, at least historically speaking, price goes up. You can't guarantee it's going to continue going up, especially nowadays because we're getting saturated and things are being weird and we're getting regulation, all kinds of things that never happened before. But like I think what Jesse's point was, if you're trying to play the short time game, you're probably going to lose, or at least you'll be swept up in any of the large market maker movements if you happen to be playing at the same time they are, but you can't control for because they've got operations.
Exactly. I 100% agree.
I'm just outlining. The only reason I brought that up is not necessarily time frame or like time resolution of how you trade, but more so for people who are listening to this who might be degen enough to try to trade perps, just for them to know what they're up against, I guess is all I'm saying. And then also another thing is like the quote from I just pulled it up just so I don't butcher it, from John Maynard Keynes that's relevant is markets can remain irrational longer than you can remain solvent, right? That's really key to remember. And also if you look at the real traders, right? Real traders who are not trading with inside information or insider information, Warren Buffett, right? 90 something dude goes, I don't fucking understand this market. That's why Berkshire Hathaway is just continuing to pile up that cash position, because he knows when the market implodes, the deals are going to be way better than a 7 or 15% drawdown. They're going to be insane.
It was like, I'll gobble it up then. We'll be good.
Yeah. Also, he did
Where's
the
the fun in that?
Because he makes billions.
What'd you say?
Like that's the real.
You say, where's the fun in that?
Where's the fun in that?
I'm sure he's got some fun fucking around, play money.
This is the
That's the
same
thing,
guy.
right?
This is
You
the
got
same
walking
guy
around
that
money,
said-
and you got your life money. You don't treat those the same way.
Dude, he's the same guy who was like, I won't buy a private jet because all my friends have private jets.
Is he trying to be different, or is he?
No, he's not fun. He's not a role model. Talking about.
I'm not saying he's wrong. I'm just watching people and how they're playing the market. Like for instance, like I was mentioning in the general chat in Discord, there are different ways that you can play a market, and the best way is information asymmetry. And like for instance, people before I was born, right, in the 70s, 80s, they knew about the yen carry, right? So that automatically, when you're taking out a loan, you're already at negative interest rate. That means they're paying you to take the loan, right? And if you take that money from Japan, which is where the yen carry was, and then you bring it to the US, now you can make a lot more money in terms of it's almost like taking it's almost like playing with leverage, but now you decrease the downside risk because you're using things that most normal people don't even have the information to, or wherewithal to have access to, or know about, you know? So if you're trying to trade just in general, again, to the people who are trying to degen or find actionable insight from this, that's the actionable insight. It's not click and buy anything. It's really learn about the fucking market that you're trying to trade before you throw all your money, and also play with a lot of leverage, because you're going to get swallowed.
So now that we've said the exact opposite of what block swap is, you want to talk about block swap?
So yeah, block swap is
Can we throw it up here? Oh, let's throw it up on the screen.
Uh-oh.
And that said, I like Joe's app. It's cool.
No, it's fun. It's dope.
So block swap is my attempt to execute on an idea that I actually stole from this show, and a quote that I stole from this show back in 2015 or whenever I started listening.
What did we say?
The quote was that adoption is the only thing that matters. And what I'm trying to do is figure out a product that people want. And in my case, I add an extra field on there of like make things people want to pay for, because sometimes you can make something people want, but they won't pay you for it.
and then you go broke.
It doesn't last that long.
It's not sustainable because it can't sustain itself because operating costs are a thing.
Exactly. So, but that's just the thing I add. If you just listen to the YC thing, it's just make things people want. And then they try to figure out the money thing later. But the idea is that I want to make a super simple user interface that allows somebody to trade, basically tap and trade. And with obviously like everything Jesse said comes into play, right? You're going to be dealing with leverage. You should understand the markets. But the goal is to simplify what you see and how you interact with assets to allow you to focus on one asset at a time and then trade, open up positions and close positions. Oh, close Bitcoin, go to Hyperliquid or something that's actually moving.
Hyperliquid.
Yeah, this is actually moving. So it's very simple. D just clicked on the down button, which means he thinks Hyperliquid is going to go down, which is, don't join the Hyperliquid Discord. But right now it's against him, and now it's going his
Hold your
way.
profit.
Close that shit. Got him, son.
Yeah.
Got him, son.
So this type of energy right here is actually the energy that I got into crypto with. Like I was hanging out, I would call my friends, we would be buying some random
Oh,
thing.
it's done just in time.
You got
The noises are awesome.
Thank you. I made them myself.
Joe's got dopamine hits. Look
but
at him.
this-
Look at
this
this. Look at
is
this.
the
Look at this.
type of
Fucking
energy.
all that shit talking. Just turn to nothing. Turn the fucking app on. And like, get it, son.
Oh, if you so basically the idea was like, how can you design something that while there is a very complex underlying thing, right? We've talked about ADL, we've talked about perpetuals, we've talked about all of these complicated mechanics, which are all inside of this user experience, but the user doesn't see any of that, right? This just abstracts it to a nice, very simple thing of like, do you think the price is going to go up or down, right? And the idea is like, can we design something that's super simple, super easy to use, and lets you effectively get access to, you know, what I said at the beginning, right? Which is the PMF use case of what, in my opinion, crypto is about. And so this is like a super simple thing. You click one button on the intro, and then you can just tap up or down. If you look in the top left, there's a bunch of different markets, right? So obviously we have crypto, but one of the challenges in crypto right now is that there isn't a lot of activity. Like a lot of the coins are just flat. You know, if it's not like Near or Zcash or VVV or whatever, everything is kind of like hovering, which is why a lot of people in crypto are not excited. But if you scroll down,
is optimized for volatility. You want movement. Your app becomes fun when there's movement.
Yeah, and so one of the funny things is if you go into like certain Telegram channels or Discord channels, you know, they're waiting for the president of the United States to say something crazy to watch the price of oil go up or down, right? And there's people that are just hanging out and that's like their thing. That's their social engagement thing. They're not going to clubs. They're not doing drinking. They're just hanging around waiting for specific things to happen and then making those trades. And so this is designed for like the social experience, right? Like you just saw, we're just playing this and we're, trading, and someone putting their hands up and people are getting excited. That's the experience that I'm trying to
Discord group, right, and do this all day.
Yeah, I mean, the other day I was doing this and my son was like, "What are you doing?" I was like, "Oh, I'm just trading." I was just sitting on the toilet, right? Trading. So the idea is to make it super simple, right? And make it a dead simple experience. Underneath, everything that we talked about for the last hour is all under there, all the complexity, but I've abstracted all of that, right? So you don't have to worry about all of that. All you do is you see the asset, you have an idea.
You got futures on here?
Those
Or
are prediction markets.
Predictions, sorry. Oh wow. Wow, that's jumping.
Yeah, these things go crazy.
No wonder people are into it.
Well, there's not a
Jeez
lot of
Louise.
volume in these things, so they move really easily.
The spread is nothing.
Dude, this is actually a great evolution from the last time I played it. I tried to play it last year, around this time last year actually, and I was showing a client. Or
Joe's been working.
It's taken a lot. There's a lot of ideas from the last 2 years of me kind of like grinding through crypto and taking little bits of ideas and just kind of, this is, a merger of lots of ideas, lots of failed ideas, a few successful ideas, but the goal is make this thing simple, make it easy to use, and allow people to trade and like trade with the market, right?
I think the thing that would make this super exciting is if you hosted tournaments on, I think Twitch doesn't allow betting or gambling, but I think you could do it on Kick, and then you do head-to-head. I think you already started doing head-to-head, right?
Mm-hmm. Yeah.
Yeah, make it PvP, truly PvP. So like if you, so like have a player join and another player join and you're going to head-to-head on this, maybe on the same asset or something.
Mm-hmm. Yeah,
I think,
yeah. There's Vibehu and this guy Drews 888. So Vibehu is like a program manager at Solana, and Drews 888 is just some random perp trader on Hyperliquid. And 2 weeks ago, I guess Solana woke up and realized like Hyperliquid is actually a thing. And so everybody on Solana started basically mentioning Hyperliquid. Anatoly went in and did the most serious bag working I've ever seen of anybody on planet Earth. Like he was replying to every single Twitter post that had anything to do with Hyperliquid.
Bag working.
I like that. Bag working.
It's a funny phrase.
You guys I feel like you guys are in crypto. You guys should know all these terms.
Bro, I'm telling you, man, I'm in the weeds of a niche area of crypto.
Okay. I'm in the trenches then if I'm using this vocabulary.
He said the most serious bag working.
Yeah, dude, he was.
I saw totally responding. I'm watching what you're watching, Joe, and I'm also I was doing work, but it's just these guys don't pay attention to what we're looking at. Yeah.
So Toly and Vibehu had a competition and they were trading, or not Toly, Vibehu and Drews had a competition, and it was like who could have the highest P&L at the end of the week. Now I think a week is a little too long to. Like people don't have that type of attention span, right? I think like maybe 20 minutes,
maybe an hour.
Yeah, have something exciting, make it 25 minutes, an hour, but it has to be really exciting to be an hour.
Yeah, you got to be like big money or something.
Yeah. So if you do a 25-minute trading session, you do it during like, East Coast time, obviously, either the second session or the early session, depending on who's trading, you could probably have a pretty interesting show for like 25 minutes. And actually, there's a site that I built called taptrade.tv. And the whole idea is around that. It's like, how do you make tap trading a social experience where it's not just, okay, you're just trading. And if you win, like nothing happens, but maybe you get these people sponsored. They have like a poly market or whatever, on the background, and you do it more like Formula One and less like, we're just trading against each other. But I think there's something interesting about getting the best of the best to trade against each other in an experience that allows it to be exciting, right? Because you're not going to be able to do this on a Bloomberg chart. There's just too many, like a normal person, there's too many buttons, there's too many switches, there's too many knobs, there's too many numbers. They don't want to see all of that. They just want to see like green for good and red for bad. and
It's some noises.
and hear the noises. The
Do you have
poo-poos sound.
shortcuts?
Yeah, there are.
Like
Command K
shift
opens.
left.
No, Command K opens the assets that you can just type. You can press enter to select it, and then up opens up and down opens down. Or also U and C also work.
You should put two robots against each other and give them a face.
Let's
And then
wrap.
See if they could. I could see if they could do it.
Wrap it.
Wrap it up, B.
Well, yeah. I mean, you guys were there. That was the show. Bye. No, I'm kidding. Well, Joe, thank you for coming by, man. You've got a perpetual invite to this show, as you know. And thank you for
What's the
giving us so
funding
much
rate?
insight. The funding rate?
I'm just joking. That was a bad joke.
I don't know.
Whatever you want
Honestly.
to give us.
Yeah.
Joke.
Thank you guys for watching. Thank you guys for listening on Spotify or wherever you're listening. I think it's mostly on Apple Podcasts, but Spotify is where the numbers come through to us. So we see those. Yeah, if you want to listen to more, go to bitcoinpodcast.com and listen to them, all of them. Or you can join the Discord.
Be like Joe. Listen to every episode.
I do
Yep.
want to bring you back on, Joe, at some point and talk about social graphs and monetizing that.
Wait,
Contact
Justin,
graphs,
you want to
social
talk about
graphs,
the Pope? Or we took up too much time?
Yeah, time for that shit.
Yeah, it's fine. It's all good. We can do it
All
next
right,
time.
we'll talk about the Pope next week because he's not going anywhere. So anyways, yeah, I mean, shout out to Zoe Saldana. She's got a new movie coming out. It's called The Avengers. You may have heard of it. And then what else? What else is going on, guys? What else do we need to shout out?
I'm writing a book.
There you
It's
go.
gonna be.
He's writing a super serious book.
It's pretty super serial, but it's like a weird amalgamation of all the things I think are interesting and I'm passionate about that kind of clash together quite naturally.
It's pretty important. This book is-
Or I'm just gonna, I'm going down a rabbit hole that no one gives a shit about, and I'm wrong about everything. So we'll see.
Also, I probably should announce that I'm winding down Archivist July 15th. So I'm just going through the legal loopholes to shut everything down. But the IP will be in an open source organization like Open Collective or something. We'll probably run an ICO and make it open source. So now everybody can just, if maybe if there's money as a motivator, maybe people care. Who knows? But I think it's really important to have decentralized file storage in general. And it's just, if people care, be on the lookout for that.
For sure.
All right. Play the outro.